Now, if you've been rocking with Don Heavy for the movement, for this entire movement, that you already know, Don Heavy loves the dividends, man. And if you haven't been rocking with Don Heavy, then my dude, come on, my dude, let's get it together. Let's make a little paper together, man. For real, I'm trying to get you paid. I already know this. Now, normally when we as the people, when we talk about dividends, we talking about a return on our time or work for something that we done did. But in the business world, dividends only mean one thing, baby, and one thing only: the moolah. Dividends are a portion of the company's profits kicked back to all the owners and shareholders. Now, with these dividends, they could either be directly paid back to us, cash money for our pockets, or they could be reinvested back into the company, gaining us more shares, more money, more power. Now, a lot of companies pay dividends on a quarterly basis, but some companies give it to you once a year. But you got to find out on your own by looking at the annual report and doing your homework on the company. You shouldn't have any questions after the company has your money. You should already know all this. And yes, for the last and final time, dividend amounts and dividend yields can both be found on the world's famous stock table. Now, dividend yield is just the percentage of the dividend payout in relation to the share price. Good companies, well-run companies, try to keep the dividend yield consistent. Now it's time for work. So a quick example, Pablo's Pop-Tart shop. They make gourmet Pop-Tarts. They put frosting on both sides instead of one side like the other people. You know what I'm saying? So people going crazy. Frosting on both sides, who does that, right? Share price is around $30. Dividend amount is around $2 a share, which means the dividend yield is around 7%, which is off the chain. Now, there's a few of us out there that's smart. They looking at this. They saying, Pablo's selling mad Pop-Tarts right now, and business is great. I want a piece of that. So you know what they do? They go and buy shares, and they keep buying shares. And that share price goes from $30 to $50. But the dividend stays the same at $2. That's going to bring the dividend yield to about 4%. You don't got to do math. Just listen to Heavy. Now, 4% is still good for dividend yield, but it's nothing like 7%. Let's face it. If you got a job and you 7 minutes late to work, you damn near an hour late. You might as well not even go. But if you 4 minutes late, then you right on time. 7 inches, 4 inches. Ladies, and from what I hear, that difference paid dividends. Now, if my man Pablo leave that dividend amount at around $2, I might be tempted to run down on Pablo. Like, yo, my man, if I'm paying more money for the shares, then don't I need more return? I mean, that's how business works, right? Now, Pablo, don't start copping please on me. I know you got to reinvest the money back into the company and make sure everything's working good, make sure everything's working proper. But if people keep buying Pop-Tarts and business stay up for over a year, then after a year's time, man, I'm expecting you to put up the dividends. That's just signs of a good company. And if you're not putting up the dividends, then where's all this money going that you're making? Us as investors, we are in this game for returns. And no matter what company it is, they better make it happen, and they better make it happen heavy.